The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we're going back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us anywhere on your mobile phone at TFNN.mobi. So the market decided to do a little sell-off today because, of course, the government, shut down. Yesterday, it did a big rally. Of course, that rally was helped by a nice $50 billion intervention there by the Fed on Monday. Goes into effect on Tuesday. Well, they did another $4 billion yesterday, and, of course, that always seems small. Usually that's a big number. Seems really small compared to the day before. And but it's still same thing. Popped right on up, and, we got a nice little rally back into it. Even though the markets are negative, they have come off of their lows. And, let's see here. Okay, so we got the S&P is currently down 4 points. We got the Nasdaq down 2 and the Russell down 3. Dow's currently down 68 points on the day. And let's look at those charts real quick and to show you what I'm talking about that 10-15 rally. We're seeing this happen, of course. A lot of times we're seeing oil right now go along with the indices, so it's also affecting your oil trades. Just keep that in the back of your mind if you're an oil trader, that we are seeing the same pump have a very similar effect often on oil right around 10-15. So this is the temporary market operation purchase that's happening. You can check it out over the New York Fed's website. And but right over here, look at this, right around 10-15, boom, just goes right on back up. So I mean, it's just on cue. Okay, not only are we down basically about a deviation on the day, and we get another volume spike. Okay, look at that volume spike right there. So we have volume spike, we're down a deviation. And especially if we measure, again, the low to high. Don't forget, I always talk about measuring. We go here, we go to high, we go to low. That's basically 18, almost 19 points. Probably 19, actually, if I get right there. It looks like I'm missing a tick there on the bottom. Yep, there we go. So low to high, we got 19. If we go in here, we go from settlement down to 1. Not even quite 19. So you got plenty of movement. You got a one deviation move. You got a volume spike. You got the Fed intervention happening. I mean, it's just hop and go long, because that's just where the whole thing's heading. And so just keep this in mind. Watch this. And I've been talking about this every day for the last week and a half. Is this intervention? We saw a bit of an intervention, but it just got bigger and bigger and bigger. And we'll see if we have, today, obviously, we go in, and I'll show you how you check. All right, so let me go through this with you. Just go on over here and just go to, say newyorkfed.org. Then you go to Market Operations, Open Market Operations, and then go down to Temporary. This is the one that you don't really see many people talking about. I actually did get an article from the Wall Street Journal, somebody, but we had another one. Yes, that's right. We had another one today. This one, again, smaller, 2.7 billion. But again, this is on top of QE. Okay? So we're well past 100 billion now. I want to say we're like at 115, 120 billion on top of the 85 billion of QE. Now they're going in and they're doing repos and reverse repurchases and all this other stuff to artificially increase interest rates without having to increase interest rates on down the list. So there's a lot of things that they're doing, but this is also having an impact on the market. It just happens to happen right as the government shutdown is looming, and of course happens. And then of course now we have 15 days until the Treasury basically essentially runs out of money and will be dependent upon income to pay their bills. Well, that's amazing, like the rest of us. So anyways, but that's sort of where it's going to be at unless they raise the debt ceiling and get their credit card limit extended. So again, keep looking at this whole 10-15 phenomenon. Go back and check out the charts. Day after day, we're seeing this move in the markets. And so, right there we see it. We go back. Look at this right here in the morning. Get a little bit of pop-up. Came back down, but then 10-15, rally back into effect. So got right over here. Got to start a little bit early, but didn't quite break out of that high till right about, right at, we got 10, 15. There we go. Then boom, breaks on back up. So, it's really, a pretty cool little phenomenon. Obviously a tradable one in and of itself. So right there, 10, 15. Getting to get a big rally this day, but still, it stopped the fall, which is the main purpose of the QE that they're doing. Not the QE, but this is more than QE. The temporary asset purchase that they're doing is to go in and stop the fall. So, market rises up, bad report, market falls down. And this would be one of the few exceptions, but still they studied it. They kept the market above settlement for the day, so they did a good job on that day too, I guess, if you want to call that a good job. Right here, 10:15, pop, flies on back up. So, they've been doing this day after day after day. We are going on day 8 of additional intervention above and beyond QE, and like I said, well above $100 billion. So for just the last week and a half, on top of the $85 billion that they're doing with mortgage-backed securities and treasuries. Hopefully that'll help you out, give you a little heads up, a little clue as to what's happening in the market, so that way you can use that to your advantage to be able to know when to better time some entries and also when to be more cautious. Say if you're short, oil, indices, things like that around 10-15, might want to look at tightening those stops, right? And if you see a one deviation move with a volume spike, so like we talked about yesterday on oil, move down like that happens, you might want to hop in and look at taking a trade in the opposite direction. So, or at least hedging, or what I do sometimes is double hedging. Let's say I'm short a contract, I may go in and buy 2 low risk, short term contracts that are going in the other direction in order to be able to help me out on the trade. Okay, so let's see. Let's go in and look at some of the markets, see where they're at. We talked about already the indices. We got gold right now flying on up 30 points. We got silver up 0.6 right there. That's 3% almost. We're breaking 2%. We're at 3% on silver. We're at 2.5, almost 2.5% right there on gold. And so they hit 3% yesterday. So some massive swings down and up in the gold and silver markets. We got copper right now. It's up over 1.5, almost 1.5%. We got oil up $1.80. So nearly 2% move in oil. We got natural gas is sitting right now down 1.3%, and we got corn is down 0.75. Soybeans is currently up 4 points. Euro dollar is up 53 pips. Pound dollar up 22. Aussie dollar is down 30 pips. Euro yen is down 8. US yen is down 49. Pound yen currently down 57 pips. Dollar CAD up a pip. And dollar franc down 25 pips on the day. Okay, so with all that, we also have, of course, some news that so far looks like isn't going to be coming out. Again, a reminder, we're probably not going to have the NFP report on Friday. So, usually we don't get a big move off of the ADP report. Okay, it's usually not the big market mover. But when you go, we're not going to have a NFP, the one that's released by the Bureau of Labor Statistics, BLS.gov, report on Friday, that gave added weight to the ADP NFP report that came out today. And so, that report comes out, has a little bit of a move, but really we saw the move happening just all night long. It's like all the markets woke up and said, the U.S. is not figuring this out. We thought they'd have it done, give them a few hours, maybe a day. And falls back down. But, again, never fear. The Fed is here to go ahead and continue pumping that puppy on back up for you. But it fell on back down. We got a negative ADP NFP report. So right here, the report came out at about 8:30, and market moved down. News headlines like NFP report drives market down. Well, that wasn't a big thing. It was down most of it already before that came up. But, obviously it did have a bit of an impact on the market. So with that report, let's go ahead. Let's look at the results on it. And we had several things that came out last night. But the one right there on the NFP report was 166,000 on an expectation of 177,000. They also revised the last number down. The market has been really sensitive lately to revisions on previous numbers. It sort of goes in and out of that phase. Sometimes it shrugs it off. But you got a lower than expected number, and you got a revised down on the previous number And it was revised from 176,000 down to 159,000. We got the euro minimum bid rate that came out at 7.45. Let's go ahead and just pull up the euro dollar for you. We'll check it out. Okay. And look at this report when it came out. Now, the main driving event usually is whenever the press conference comes out at 8:30. As you can see, today was absolutely no exception. And so we had the bid rate come on out. Again, the bid rate is released at 7:45. So right, here, we'll get the bid rate out. Really no impact at all. No surprise. It's at 0.5%. It was expected to be 0.5%. Then Draghi comes on the line. He starts talking. That becomes the major market mover this morning. And through his fun little speech, the euro dollar is able to muster itself about a 70, 80 pip rally off what he says, long live the euro, etc., the dollar demise, whatever. So, always be aware of those events. Be aware, even if you're not a news trader. Okay, I love trading news. Even if you're not a news trader, you need to be aware of it. Okay, I don't care if you're a bus driver. If you're going to walk across the street, you better look both ways, because the bus may hit you and kill you. Okay, so always be aware of the news, just so you don't get nailed whenever that comes out. And let's go in. Let's look at. Let's see. We got Bernanke, by the way, is going to be doing a speech at 3:30. Okay, he's going to be doing the Federal Reserve's Bank Conference, the Community Banking in the 21st Century in St. Louis. And so he'll come out, he'll do that speech, and but just be aware of that, because any kind of Q&A could have an impact on the markets around the end of the day at 3:30 today. So expect a little volatility as people may look for any kind of interest rate cues that could come out. All right, China is still on bank holiday today as well. And let's see, we had Spanish unemployment change. That came out last night, 3 a.m. Their unemployment has got worse, so it increased even further. Really, really bad over there. And then we got construction PMI out. Britain came in a little worse than expected. Let's go ahead and check that one out. We'll go into it and pull up the pound so we can look at this one. Came in at 58.9 on expectation of 60.1. The report was released at 4:30. So right over here, you saw very little impact. And that was one of the ones that we don't usually give a high rating to, and you see why. Usually, 20 to 30 pip move is what I'm looking for on that trade, and that's pretty much what we got. So I did a little pullback before taking out this morning, and basically went with the euro as the dollar got weakened across the board, and so that helped increase the pound dollar itself. Now, as far as what other news we got coming up this week, we'll talk about that when we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So looking over at silver, checking out gold. Silver taking on off. Had a nice trade right there on the 21.80 if you could have got in. So it was a sort of a nice contract, popped right on up, and had it ready to get out if need be. But it is flying on up there. So it looks like that's going to be a good, solid trade. Wanted to do that. Just sometimes the commercial break come at the wrong time, right? So let's go ahead. Let's check out gold as well. Gold, we have a contract right over here. Let me pull up the chart for you first. We'll look on at it. And it's been moving on up. And the one contract I was looking at looks like it's already moved just too far, too fast. And had the scanner right up here. And it's pretty simple on the scanner. All I got to do is go in and put, choose binary scanner. And choose 65 to 95. And choose both or buy. So if I'm looking to buy, there's no reason to see the cells. And I go down here and I can see if there's any good contracts. Now I can if I want to watch, just in case, market changes direction. Then I can go choose both right there, and it'll show me any possible trades that could exist, such as like a 13.20 for 29.50 sort of came in, went out just as the price is changing, and you go, well, where'd it go? Well, it went away because the price is changing very rapidly right now. And notice how this is like 65 right there. Well, to change that up, I want to go over here, and maybe if I want to see that, I can widen it out. I can make it say 60. And then it'll bring that contract up. I can see it. See it disappearing because it's 68.5 instead of 65. So now it's up there on the screen. If I like that trade, let's look at it. 13:20. We got about 12 ticks, and we have 4 minutes until expiration. So this trade, I mean, it's moving fast. And so if you wanted to hop in on that trade, but again, you don't have a lot of room. You got about 7-8 ticks. That's not bad. I get it for $76.50. So if I put that trade on right there, and then you get filled on that, okay? So right there, around $75, you could have got in on the trade. Hopefully you were able to maybe grab one of those. And then the important thing, I mean, these things move fast. They move very, very fast. And again, that's a 13:20 contract. There you go. So you would have had another chance right there. But what you got to do, okay, is you got to be ready to get out of this contract. Okay, please be ready to get out of the contract should it hit 13:20. And I can't stress the importance of that enough. Zoom in on that chart, do whatever you got to do. Set your alert. But it's not bad. I mean, you're talking a $25 hit. Right now, if you got it at 68, you're talking about $18 risk, okay? But you got to be ready to get out of the trade. If you're not willing to get out of the trade, don't get in the trade. Because when these things move against you, they're way too fast. And it'll go like 50, and then it'll be like 25, 20, 10. And you'll take a $75 loss on a $25 profit trade, whereas you could have just taken a $25 loss on that trade should you have, got out where you're supposed to. Another big tip, like right now, we're right on the edge. And we're going in that last 2-minute dark zone, okay? And what I see a lot of traders do, and I don't think this is a bad idea, is they get out. So like right here, they're out of the trade, boom, done. 2 minutes before, and we actually just hit the strike. And you go, well, every time I seem to get out, it seems to go right back in my direction. Well, on expiration premium collection, that's okay, all right? Because you're managing your risk. Okay, so you go in, you buy at $75, you get out at $50. Like it's like what, right? $53 right now. So you go in there, you get out of the trade. But if you don't, you know what? The thing goes against you. It nails you, and it's just not worth it. I'd rather have one trade or maybe 2 trades to make back my profit. There's have to have like 10 trades to make back my profit, or 3 or 4 or 5 trades to make back my profit. So you got to keep your risk reward in check. And as you can see right now, it's at 1319.9. And on Nadex, you can actually see, let me show you this. You can see the indicative price right there. See, 1319.92. So if you didn't go in, if you didn't take your stop, it's not going to always work. As you've seen on my show, the majority of them do work out really well. We've done great on these trades. But the only reason it works is because you take your stop. Because right here, if you didn't get out and you bought in at, say, 75 on the trade, then you could be potentially, we got 2 minutes left. You might be profitable. You might not. Your heart's beating like crazy. But you basically just took on a $75 risk because there's little to nothing you can do about it at this point. Because in the last 2 minutes, quotes go dark. So it may come back up. You may be profitable. You may be lucky on the trade. Doesn't mean it was a good trade. Okay? So one of the worst things, and I think if you trade for an amount of time, you can testify to this. One of the worst things that can happen to you as a trader is you do the wrong thing and it works. Because then it reinforces bad behavior and will end up costing you a lot more money in the long run than it did on that lucky instance where the trade worked out for you. So don't reward yourself for bad behavior by thinking you know all that, because that's when it comes back and slaps you just as you think you got it. All right. Hold it right there. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, so we would have finished in the money if you got lucky. But again, I got to stress to you, as a trader, do not let yourself feel rewarded. I mean, it's always nice when you make a mistake and it pans out. It's not good when you make a mistake on purpose and it pans out, because it encourages you to take on more risk, not set that stop loss. You know, different things like that. And then, of course, that's when it really adds up and it nails you. And so I don't want that to happen to you. So just follow the rules. Get out when it hits your strike. Okay? So now let's go down. Let's check out oil, man, moving like crazy. We got gold up 2 deviations right now. We got oil pushing up on 1.5 at the moment, almost 2 from the low right there. And not quite on a spike on the 10 minutes, but looks like it's approached it. We could always back down. I look at 5, 10, and 15 simultaneously on another chart setup I have where I look at all 3 time frames at once. And I'll look for those volume spikes when it hits a deviation or when it moves 2 deviations. And you can see we actually had a volume spike right here on the 5 minutes. But remember the rule. One of the rules I talked about yesterday. Okay, this rule would have saved you. Okay, we got a volume spike. We have low volume here. Okay, we got a low volume there. And then we get this spike that is double the volume on both sides. The entry, okay, the entry itself would actually be on this bar right here if it breaks this bar's low, which it did not. So I would not get in on this bar. Now, if I want to, I can like see, okay, this thing's really just had a little bit more oomph. It basically went right in that 1.5 deviation line. Pulling back right now. If I want to, I could get in actually on this bar if it breaks this low still. So I could still choose to get in. I love it when it's the bar right after, because, I mean, that's when things really start rocking for you. Sometimes it takes a few bars, but this bar is the measurement. Okay, this bar's, right here is the measurement for going short on this trade. So that volume went up. They dumped their contracts off. You had a few more people buying at the high. That's what's happening. That's what drove it on up to 1.5 deviations. Looks like it's trying to pull on back down. If it does break that bar's low, and you can always get specific there. Right there, the low of that bar is 104.01. So basically, if it hits 104, then that's when you can look to go short. What would you target if you were? Well, you'd probably be targeting this 1 deviation level right here, 103.52, if you're doing an out-of-the-money contract. And you could obviously put on an in-the-money that's just above the deviation right there. 104.23 is the high, so somewhere above that, 104.23. So the way that we'd figure that out is we pull up our scanner. We go in and we choose the oil contract. Okay. And now we go, okay, well, we want to sell. And we can look at the out of the monies and see what's available. Okay, so we got 104, or let's see, we're on the in the monies right now. So the in the monies, we got a 104.50 and a 104.27. Well, the 104.27 would work, and the 104.50 would work. The 104.27 is going to give us more money. It's also expiring sooner, but it is closer. Okay? Again, we can't get in until it hits 104. So it's got to break the low of the bar, the low volume bar right here that happened after. We want to see some momentum in our direction. So there might even be another contract that pops up. We'll see as it pushes down. So sometimes you're going to have it in the money, sometimes you're not, but it's got to be at least above this high, again, of 104.23. So that gives us the 27 at 2 o'clock, and it gives us the 50 at 2:30. So not a lot of profit in those trades, but it's a high probability trade. Now, what about the out of the monies? Okay, we'll go up here to switch this on up. Let's take it to 5 to 30. Okay? And then let's drop on down. Let's see what we got. We got a 2 o'clock, and we got a 2:30. And let's see, 103.50 basically, right around 103.50 is what we'd be looking to target. And let's see, we got a 103.87 for 83.50. That's only $17 risk. That's a pretty good trade. We got a 103.67 for $94. Now, again, we only have till 2 o'clock. So the issue there is you only got 21 minutes for it to make its move. And then we have a 103.50, which was our original target, right, for 2:30, only an $8 risk on the trade. So in most of those instances across the board, they're pretty good. Pretty much any one of them could serve you pretty well. So I like the 103.87 at 2 o'clock, but we got to get some momentum going. Right now, we're really not getting it. It's getting close, but we're not there yet. And so what you do is, just click on these contracts. Okay, we can open all three of them up if we want to. You can open up 5 tickets simultaneously. I use this little pen program. Makes it really easy. So right there, and right here. This just lets me get like everything up at once. And now I'm sort of done with the scanner at the moment. Okay? So I can put this over here. Okay, which trades am I going to target? Which ones do I want to do? And again, I don't hit the button until it hits my price. Okay, it's got to break the low. And again, that low right there, 104.01. So I'm looking for basically a low of 104. I can use any one of these. I could also use a combination of them. So we go over here. We go, okay, well, I like this one. This 103.87. That looks like a really good trade. And we're getting close. We're at 104.01. We got to a low of 104.01, but we actually didn't break it. And here, I'll zoom this back out a little bit so you can see that line. It sort of looks like we have, but we got really close. Haven't broke it. 104.02, 104, 104. There we go. Okay, now we're in, and we sell the contract. Okay? So if you got it on that trade, somewhere around $70 would be the potential entry on the trade. Okay? And now you could also go for the lower contracts. You could go, hey, I'm going to take one of each if I want to. And I could go right here. And if any one of these pays off, it'll more than pay for the risk on the other two. Okay? So we got that trade in. across the board. You get all 3 contracts, running for you, working for you. So your next step would be to go in and put in take profit orders on each one of the contracts. See if they do pan out in time. And so if we go in here, like I said, if any one of these pays off, they'd pay for the risk on all 3 of them. So we go in, let's take the one that's closest first. Let's get that one out of the way just in case the market does move. And we'll click on that. I'm going to go in and type in $57. Okay? So we put that in and place that order right there. All right, so now we have a buyback set to go. So that take profit order is there and working for us. Let's go ahead and take this 103.67. Again, I'm going in order of like speed of expiration because of the price. It'll get to 103.87 before 67 before 50. So just in case it moves fast, and since I'm doing multiple contracts, this is a little more effective way to put it together. Put in 57. Our risk is really low. I mean, we got, $25, $30 on one trade. We got $8 on another. We got like $11.50 on another. So really low risk trades. Right there, 57. And we can hit place order on that one as well. Okay. And one of the nice things about the scanner is it'll actually show you, unlike in the Nadex platform, you won't see this. In the scanner, it'll link your working orders directly to your open positions. So you can see, if you've submitted one on that. Because like if I go and I put in 3 contracts, and I'm over inside the Nadex platform, I'll show you this right here. It can be really confusing to go, I open one on this one, and you have to go back and forth between like the limit and the open, limit and the open. And it's easy to even double put in a position on one of them and miss the other one or whatever. So the nice thing is with the scanner, you go in, and what it does for you is it allows you to put in that working order right there on the contract, okay, and see the working order being associated with that specific contract. So I know that, okay, I have a buy limit here, I have a buy limit here, I have a buy limit here. Now, I'm putting these in at 57. So I could go lower because I could say, hey, I've targeted 103.50. What I'm trying to do is I'm trying to be really honestly just conservative. I'm like, hey, if I can risk $8 on a trade and I can make 30 or 40 bucks on that trade, that is fantastic. Okay, I don't need it to go all the way to 103.50. If it goes to 103.87, I'm going to lock in 20, 30 bucks on this one trade. That more than covers the 20 bucks I have in risk on the other 2. If another one of those works, awesome. That's even more money I'll make. That's another 40 bucks. If the other one works, that's great. Then I'll make another like 40 something dollars. So, do my risk management, then let's go for profit. So sort of just a weighted tier. Now you don't have to do all 3. You could just do 1. So it's sort of, up to you. Obviously the one that's closest to where the price is right now is going to have the fastest movement. Now the other thing is I could go in and I can just double check at the moment, while the market's oscillating around. And just see if there's any in the monies that, might look good. Like we have a 104.07. Is that acceptable? Well, if we look over here, nope. It's got to be above the high, 104.23. So even though, you could do that 104.07, it's not in our risk management model because that means I'd have to get out if it hits it. So I didn't really have a double binary setup on this one. So we'll have to see if the market keeps pushing on down. If it gives us, we don't have that much more to go. But if it does push down another like 10 ticks or so, then we'll be able to take profit on that trade. Okay? So if we get about another 10 ticks to 103.87. So not a bad trade at all. Hopefully you are maybe able to check that one out. All right, so I'll leave that to the side, but you know what we're doing, why we got in, where we got in. You have the timing, you have the exact system in place, and we had the spike. We had the bounce off the deviation. We broke the low of the bar after the spike, which was great because I really liked that it happened after the deviation, and moving on down. So really, really simple. You also, this is a simple system you could do on something like gold and other contracts as well. Let me see. Let me open up another chart for you. And, okay, there we go. Get this one going, and we'll pull up some oil stuff. We'll leave that up there just so we can watch it and see it do its thing. There we go. Okay, so we just took profit, by the way, on the 103.87. It went right down to it, filled us, got hit. Now we have, in effect, no risk on the trade. We, of course, are risking our profit, but we're not risking initial capital, meaning, like, let's say these other 2 expire out of the money at total loss, okay? Well, we're going to still have the same amount of money, if not more, than we had to begin with. So I like that. That's a good scenario. So that's a benefit, sort of a way to layer into the binaries by doing this trade. So I went in and I sold the contract, and we got in, and we took basically, about a $20 profit and covered the risk on that trade. I did a couple contracts there. We got 3 contracts total now, and just 2 of them are left open. Okay, so with that, let's go in and we'll let it play out. And while it's playing out, we're going over here. By the way, you could also see that 10-minute happening right here. We even had it on the 10-minute chart. So even better when both of them line up. The low on the 10-minute, 104.01, same low as we had on the 5-minute. So right there. So let's go in now, though. Let's pull up and look at gold. And there we go. And we'll pull up a couple of the other ones. I want to pull this up more just to show you some of the things, just ways that you can use it. And you may be looking at bigger time frames on gold. There's a lot of spikes, but it's sort of cool. You can go down here and it spikes down. You get a spike right there. In the evening, spike up. So just using the spikes can really help you out as you learn to read them and look at them and see how they work. So. Anyways, but let's scan through some of the markets. Let's see where everything's moving at today. And we got, let's see, how long do we have? We have 13 minutes for the 103.67. Okay, to build, if it moves down, to be able to potentially take profit right there. So it has to move down about another 20 cents. That's not a massive move. We've seen that move already while we've been on the air here. And we have till 2:30 for it to move down to 103.50. So if it does, we'll have a nice return. Be looking at somewhere around on all 3 trades combined. Let's see, we had about a $40 risk. We'll probably bring in about $100 combined between all of them. So about a 200%, a little over 200% return on the trades if it's actually able to hit 103.50 by 2:30. And again, right now we're sort of sitting pretty with little to no risk at the moment. Okay, so we got Aussie dollar moves on down. Look at that, 1 deviation. Oh, that's just perfect. Love it. Moves right on down to 1 deviation. Notice it did the same thing yesterday. Started bouncing on back up. And, you can look at tick volume. I prefer to look at futures volume, even on FX. And you see it a lot clearer. And you go, well, that wasn't exactly 1 deviation. Don't forget, 1 deviation from high to low. Okay? So we got about 70 pips right there. And we get from here to here. Perfect. So we're at a deviation. We get a volume spike right here. Then we bounce back off of it, right back up to the half deviation mark. No problem right there. You can see how this ran right up to here. Okay? And so it would have been a great in the money or potentially out of the money or a double binary or ratio, depending on how you wanted to put it together. But it's a great, simple volume spike trade off of the deviations. You want to wait for those deviations. So great spike off the deviations there. Go ahead and we'll check out euro dollar right now. And on euro dollar, we got the market up 1 deviation on the day. And you can see a pretty big volume spike, but so much right there. You probably would have been a little nervous. Might see it a little bit there because that's tick volume. Might see it a little clearer if you go over and check out the futures. And now it's a lot clearer for you to see that volume spike, especially right at that 1 deviation level. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global has a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, we're going back here to the Diagnostic Trading Hour. So we're going on down, we're looking across the board. We got the pound dollar spiked on up there with basically one deviation from low to high. Even because we almost went down negative half, we went above half. And so we did get a full deviation move again from low to high. And again, if you want to use the volume with it, just go over and check out the futures on FX, and you'll see getting that spike. Okay, so now let's go down. Let's look at dollar CAD. We'll go through and just scroll through the markets. We've got a few minutes left here. But move on up to 0.7, back on down to settlement. And dollar franc, and then we'll do a little focus on the indices. So one deviation move right there, all the way down. Perfect deviation move and bounce on the dollar franc. So it would have been a great spike reversal trade. We got a dollar yen. And again, this isn't just a volume spike. It's a volume spike off of a deviation. Ideally, off of a full deviation move or more. So you get like one deviation, low to high, one deviation, 1.5, 2. Those are areas where you can use it. 0.5 to 0.5 would be a one deviation move. 0.3 to 0.7 would be a one deviation move. But not just because it hits a deviation has a volume spike. I want it to be hitting a one deviation mark in order to make that trade happen. All right, let's check out our indices real quick. We got the S&P running on down. It moved down to one deviation. You hit one deviation. You also hit Fed intervention right at 10:15. Everything, boom, pops and flies on back up. Might actually fill the gap. And this is such a low probability gap reversal. I avoided it. Now I'm like, man, maybe I should have went for it. But, a lot of times I just avoid very large gaps because rarely do they fill. So we'll see if today's an exception. Apple has been pushing Nasdaq quite a bit, making those big gap fills, with all the buyouts and everything else that's happening over there. So has actually been making it actually fill the gaps quite a bit when the others have not been able to. So you can see massive down move right there on Nasdaq, and we see it move on up and fills in the gap, getting about a deviation from high to low. Let's go in and let's check out the Russell. And right here, let me see, where is my, it's not showing up, so I'll just put it in. All right, so right there on the Russell, we got moved down to 0.7. Didn't quite hit the one deviation on Russell today. It did do a pretty strong rally on back again at the same 10-15 time frame there. Started making its move on back up. Has not yet been able to fill the gap. And then we'll wrap it up there. We got a we'll check out the Dow. That'll wrap up our indices. And the Dow did a perfect one deviation move. Look at that. I mean, just right, basically to the tick, before it turns right back around and goes on back up. Let's see here. We also can look at a few more markets. We got, we checked out gold already. We could look at over at silver and see how that market's playing out on its deviation moves. But it looks like it's right around the deviation mark. Let me pull this up. We've had a massive amount of implied volatility surge in. So we got a 2 deviation mark. That implied volatility surged in. We still got a very similar move, 2 to 3% move today. But now that was priced into the market, into the options market. Increased the implied volatility, therefore increased the deviations. As you notice, a move yesterday that was massive, now today was just half a deviation. So very within the norm of expectation. Remember, there's a 70% probability it will hit that half deviation mark on either side. Then we go in here, we check out copper. So copper had a decent little move today, moved on up to one deviation perfectly before just chilling out right there at the market close, and would have made a great potential spike reversal there at market close on the 5 minutes. We also can go down and look over here at just a few more of the markets, and let's check out our ags real quick. We got corn. Corn moved down half deviation and moved right back up, and last one there we got soybeans. Soybeans basically getting a half deviation as well before falling right off of it and giving you a great volume spike on it as well. All right, y'all have a great day. Have a safe day, and we will see you later right here on TFNN. And stay tuned because there is another show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.